Good morning, Pascal. Welcome to join us and meet the Six-One Financial and Investor today. I'd like to invite you to tell us about the story regarding to Matsa Resources, and please also allow investors to raise their questions, and we will discuss this all together after the presentation.
Okay, thanks very much, Steph. Welcome everybody to Matsa Resources. So I just want to take you through our story at the moment. In particular, we'll be talking about the gold focus and our Lake Carey project. This opening slide is it's a picture of the Red October operation, the open pit there that was developed by Sons of Gwalia in 1999, and then access down through into the underground here. That was done by Saracen and more recently ourselves. In the background there, you can see the Lake Carey itself. So you can see here a snapshot of the corporate aspect. We've got 360 million shares, around about 6 cents at the moment for a market cap of around about $20 million. Now, that is very, very cheap for a company with 874,000 ounces in resource. And in particular, and I'll go through a couple of projects a little bit later, we have two operations there that can be brought into production, and with a Matsa mill, those two operations alone return about $96 million operating profit. Now that's enough to pay for a mill and return a profit. That's beyond our current market cap. But just a brief summary, 874,000 ounces. This is up 99%, call it 100%, so doubled our resource compared to this time last year. We have just over 500 square kilometres in the Lake Carey area, and you'll see there with the picture on the left-hand side, we're surrounded by Sunrise Dam. Further up north, and I'll show you that on another slide, we've got Goldfields Australia, Granny Smith and Wallaby Mines. And then to the east, we've got Butcher's Well, which is a Northern Star and Anglo Gold Ashanti joint venture. And then further south, we've got Fortitude, another project there that's just recently gone back into operation called Linden Alliance. We've got three key operations: Fortitude, Stage 2, Devon Pit and Red October. Importantly, we did a concept study. We did a study on a mill to be owned by Matsa for around about 600,000 tonnes per annum, and it highlighted significant economic benefits to our projects. We've got excellent potential to become a significant mid-tier Australian gold producer. So that's an outline of our tenement package. As I mentioned, Sunrise Dam just there on that left-hand side. Our key focus areas in the recent past has been Red October, in and around Devon and Fortitude. This last 12 months, we've added resources at Binder, Gallant, in and around the Devon Pit, but also a few satellite projects there. We've upgraded the resource at Red October, and yesterday we made an announcement, or in fact early this morning, with regards to Fortitude, where we've increased that resource just now by 147,000 ounces. So what I just want to quickly focus on here is that we have an ore purchase agreement with Sunrise Dam, and that is where the ore from Red October has been going over the course of the last 2 years. Essentially, what we have to do is we have to truck it all the way down through here, out that way, all the way around up to Sunrise Dam, and that's around about 85 kilometres. It's fairly expensive and actually is probably not the most cost-effective way of running the business. The other thing is Red October hasn't been performing as we'd hoped. So we've actually taken a step back at this stage and we've ceased production from Red October. And we're really looking to focus on how to develop and advance the project as a whole. So that's where the Matsa mill comes into play. Here's our table of resources. You'll see here the bottom line, 874,000 ounces. Of importance to me, note the 2.4 gram resource grade. So that's quite healthy when you consider open pit and underground. In terms of the open pit, we've got this one here at 1.9, nearly 2 grams, largely driven by Fortitude. And then we have in here over and at the Devon area, a healthy open pit grade of around about 3 grams. Devon pit itself produces at 4.6 grams per tonne. Just a visual graph of our changing resources since this time last year. And you can see that through the course of the 12 months, we've been steadily building up as we review and review each of the key project areas and where we've done some additional work, for example, around the Devon, some drilling over at Red October, again at Lionfish as well, and then recently at Fortitude North. So you can see here a healthy, steady increase in resource over the course of the last 12 months. This here represents the exploration targets, and I'll show you that shortly as well. Basically starting at a baseline of 439,000 ounces this time last year. Our target is to reach over 1 million ounces. Just for visual reference, these colours relate to the colours of the previous slide in terms of the resource and mining hubs for Fortitude Hub, Red October Hub, Devon Hub, that sort of thing. So around about mid last year, the company reviewed all its tenements and identified the key sort of exploration areas. And this is the list, the major list of the key targets and the potential exploration opportunities within those. And you can see here, as I mentioned before, we're looking at anywhere between about 600,000 ounces to 1.4 million ounces across these key projects. Now, the major project that we know of at this stage that has a little bit of drilling in it and gives us confidence of producing a significant new resource is Fortitude North, which could give us an additional 600,000 ounces. So we see the best value for the company in terms of future is to have our own mill, which at this stage requires financing and construction. But through this mill, we'll deliver excellent returns for the Lake Carey project, and in particular, the Fortitude Stage 2 and Devon mines, which collectively, having our own mill, increases the profit margin or the operating profit from around about 35 million to 55 million between them to around about $96 million between them. So we've done, that's using a 600,000 tonnes per annum mill over the course of 5 years is our target. So once we establish 3 million tonnes of feed, we're going to press fairly hard to move this project. Okay, so a summary of the study for the concept Matsa owned processing plant, around about $42 million build cost. Other costs are around about 16 million. Overall processing costs are $32.50. Now, $32.50 is not cheap, but it's not necessarily on the high side, but that's largely an artifact of a small processing plant as compared to your typical processing plants of around about 1 million tonnes per annum. One of the things that we have considered in our study is that the plant needs to be sufficiently modular that you can actually increase the plant capacity to 1 million tonnes with minimal work and capital. On this slide, I'd like to draw your attention to the positive cash flow from the Fortitude Stage 2 and the Devon projects. Importantly, the new upgrade in the resource is expected to result in new optimisation work, and I expect that we'll get a larger pit out of that. That will translate into an increase in reserves, and I expect that that will translate into a more positive, an increase in positive economic outcome for Fortitude Stage 2. A mill construction, planning and approvals process will probably take us around about 18 months to build. Some of the key features of the project at the moment is we have a number of granted mining leases, and all our major projects are on that, which means that we don't have native title heritage issues. We have an existing camp, 72-person capacity. All roads are in place, and we've got a very experienced team on board. The Devon pit, that's our existing cash flow, and you can see there it starts to make money early in the operation, and it has a maximum cash negative position of around about 3.5–4 million. Over a 12-month life, it produces around about 37,000 ounces with operating cash costs of 1,144, and this assumed a 93% recovery at the mill. We have confidence in that recovery because GME operated a trial mine in 2015-2016, and they achieved 93% recovery of the ore that was sent through Carosue Dam, owned by Saracen at the time. We expect that with some additional drilling, we should be able to increase the resource. Well, we should be able to improve the outlook of the project here with improving the understanding the grade shoots and be able to focus on the higher grade portion of that mine. Fortitude Stage 2. So at the moment, this produces $55 million operating cash flow based on a 22-month mine life and returning just over 54,000 ounces at 93% recovery. Maximum cash exposure for this project is $8.4 million and had operating costs of just short of $1,500 per ounce. And note, this is based on the 2017 model, and you'll see a couple of details written on that down bottom on the right-hand side of 343,000 ounces in that resource. Our resource now stands at 489,000 ounces, and as I said, I expect this will change, but the outlook for this project should change in a positive way. So this is a long section of the Fortitude deposit. Fortitude Stage 2 is the blue outline here, so that at the moment is where the pit would go. This is the 2017 resource. This is now the 2021 resource. So early on, what I've identified is potential additional mining compared to the existing pit design, which is this one here. So I think there's upside in that region. There's upside below the existing pit design, and then there's upside to the south over here where we have an increase in amount of resources. Over here on the right-hand side, just an aerial view of where the Fortitude Stage 2 sits, and then the satellite deposits, Binder and Gallant resources. Excuse me. In terms of our mill, at the moment, we are considering locating a mill here, and that the tailings would come back and be fed into within the waste dump that will be developed from mining Fortitude. So these two projects here have a very short haulage distance to get to the mill. So Binder is one of the latest resources that we've put together. It was mined by WMC in the 1980s. Essentially, they chased the shallow easy oxide mining, easy mining oxide, and that mined at a grade of around about 3.5. They stopped in fresh ore, and at the moment, this resource remains open along strike and down dip. Red October, I won't stay on this one too long, but essentially, this is a long section looking to the west. The blue is existing developments. The yellow is what we've developed this year. And then the green and the red are existing resources. And importantly, these are mineable shapes. Now, we haven't done an economic assessment on this to develop a full life of mine plan, but we have around about 250,000 ounces in mineable shape that still needs a mine plan wrapped around these. One of the important things about Red October is that because of the ore purchase agreement with Anglo Gold, our transport and processing is actually captured as capital costs, which are all in sustaining. So if we looked at the actual operating cost of Red October, the actual operating cost in the March quarter was around about $1,300 per ounce. So the exploration potential at Nemo remains quite high. We've placed the mine we've ceased production. Our focus will be on exploration and a complete drill out of the resource, but it's a low priority at the moment in terms of developing and advancing Lake Carey as an entire project. But just to give you an idea of some of the historical drill holes into Red October, we have these over here, 12 metres at 23, 11 metres at 28, and I can take you where those all exist. So the lionfish is one of the recent areas we've developed, we've increased our resource. Along strike to the north in the Bruce Costello region, we've got some strong hits in within the mine. The marlin at depth, narrowed but ounce dirt in places. And one of the other things that we've developed over the past 3 weeks or so is a couple of new targets out to the east and out to the west. And these were developed from seismic data sets. Just a brief on what we expect to talk about over the next few months. Just an update on the drilling at Devon. Red October, we've done that. Fortitude Stage 2, we did the model, as I mentioned earlier, we released that this morning, and we will be doing some optimization and mine design work on that, and we'll wind up with a new schedule and cash flow model out of that. And of course, we are progressing our studies on a plant, or a processing plant, and at Devon, we're also progressing the studies required to get mining approval. Here's an image of our regional exploration pipeline. You can see here on that right-hand side, the targets are colour-coded by exploration stage, with blue being the earliest exploration stage where we have the least amount of information and the least amount of confidence, I guess, at this stage. Moving up through the green into the yellow and orange and red, where we have high confidence of our geological knowledge. One of the big issues with regards, or the positives for us, is that Lake Carey, because it's a lake cover, the geology generally is hidden. So there hasn't been a lot of work in the past, but more recently, we have access to a rig that can actually sit in the lake and actually drill. It's a track mounted as opposed to wheel and tyre traditional rigs. Another thing is that seismic work is now in a position to be able to see the first 300 or 400 metres of ground. In the past, seismic really only could see past 500 metres, which from depth, which from an exploration for gold perspective is not ideal. We want to understand what's in the top 300 or 400 metres in terms of open pit potential. So that's where seismic is coming along quite strongly in terms of identifying structures below cover. And importantly, we have three major trends: the Fortitude trend along here, and you can see quite a number of prospects all along that trend. Then we have the BE trend along there, and then we come up through here through Devon and then up into Red October. So we have around about 160 kilometres of strike length of very prospective structure. Again, just a recap of our exploration targets. I won't stay on this slide. Just recently, we did some drilling at Devon. We're really looking at extensions to mineralisation, following up on some identified gold in soil geochemistry anomalies, and some potential geophysics targets that are hidden beneath surface. And on the left-hand side there, you'll see a selection of intercepts from the drilling. In particular, we've got a couple of new targets. There's a new one here called Lin 5, which was not known before. And then Hill East 1 and Hill East 2, a couple of drill holes here, one in particular there. That is the deepest drill hole in this entire region. And that is this hole here. So the deepest and the best intercept. So we think that there's a lot of potential at depth. We just have to define on where the best place to drill it is. This is 6 kilometres by about 4 kilometres. So Fortitude North, I mentioned that one before. It's approximately 6 kilometres north of Fortitude Stage 2 gold mine. And you can see here a selection of recent drilling results from 2018 through to 2020. 47 metres at 2.5 grams, 26 at 2 grams. Those are very sort of healthy numbers. The anomaly is more than 1.5 kilometres from here to this region, and it's probably only got maybe 24 holes. So we see this as being a significant exploration target. Some simple cross sections through that. You can sort of see there's the cover, and then in this zone here, saprolite weathered zone, and then into the fresh rock down here, gives you an indication of the type of grades: 3.5 metres at just over 12, and another 17 at 3.4. So some reasonably healthy grades. These sections are around about 700 metres apart. One note I'd like to say is that yesterday we had some geologists from Sunrise Dam have a look at some of the drill core from this project, and a couple of holes showed some similarity in mineralogy to what they see in places at Sunrise Dam. So we're quite confident of the geological environment. Just a very quick one with regards to Red October. I mentioned before some new targets, one out here underneath the eastern side of the pit and one out here to the west. If there is economic mineralisation in these targets, then that completely changes the outlook for development of Red October by providing brand new mining fronts to the established Red October and Marlin zones. And lionfish sits in there, and runs parallel to this shape out there. So just as a summary, the company's committed to transforming Matsa into a mid-tier gold producer. And we're going to do that through advancing Lake Carey as a whole project, rather than actually what we've been focusing on is individual projects in the past. Devon and Fortitude, as I mentioned, can deliver $96 million. That's before we complete a new optimisation on the updated Fortitude Stage 2 project. So that could substantially increase over the next 3 to 4 weeks as we get that work done. Yeah, it's a 600,000 tonnes per annum mill strategy at the moment. We've got a number of targets that are drill ready, and our pipeline, we've really worked hard on improving that exploration and project development pipeline that will see us deliver over that 1 million ounce resource target. So thank you, Steph. Are there any questions?
And also about the plant, about the ore processing plant, is this made about like more than $40 million? $40 million. It's a very large fund, a lot of like capital. What's kind of the way you can sourcing this fund? I think you mentioned about like itself to producing to make the profits, cash flow to make it, but is there any other funding resources?
So Paul's working through some funding options right now. An option is, because Devon Pit is so high grade, we could bring that into production. And then out of the profits, that will probably give us somewhere around about $25, $30 million. And that can be part of the a down payment, so to speak, on the mill. Another option is obviously the debt funding or a capital raising or something like that. We haven't exactly made up our mind on how to go about that last part, but we think that Devon can probably provide the major part of that funding requirement. Another option is a joint venture with someone either puts up the capital and then we pay them back if they, and for example, a placement into Matsa, something like that. Paul, as I said, Paul's working through that. We haven't got a final plan just yet. Okay,
and also about the target stock price and market cap. You mentioned was like seriously was undervalued. On this stage, what do you think the ideal or target stock price and market cap?
Well, we think we should easily be a 20-cent share price at the moment with this sort of numbers. I think that there are probably 2 or 3 reasons why we're not that sort of price at the moment. And I guess the first one is Red October hasn't performed as expected over the course of the last 12 months. The other big issue for us, I suppose, is that we're seen as having a capital risk. And that is part of the issue that we're addressing in terms of our vision to expand and actually put together a full business, including a mill, which is why that we think with regards to Devon Pit, if we can get that into production at this sort of grade, we can do a toll treating arrangement or something of that nature and actually start to develop some internal funding for the project going forward. And that should start to drive the share price up. You'll note today with our release, our announcement, our share price has ticked up that little bit as well.
So from your own industry experience, what is the principle to choose projects? What's the standards or criteria you got, like the team decide to develop or acquire or to do some works on these kind of projects?
Okay. Look, technically speaking, we've got very good experience in-house. We need to go external for support for the approvals type studies, flora, fauna, environmental, all those sort of things. Our biggest risk, as I said, is capital. And Paul, now that we've stopped production at Red October, Paul's in a much better position to fully focus on that.
I think, and also about the plant, mentioned about the permit, the license, what time do you expected that can be approved?
One of the strong benefits of our proposal at the moment is the plant would go at Fortitude gold mine, which is already a disturbed area. It already has all the haul roads. It has access to a waste dump so that we can dispose of the tailings, and it already has an existing mine plan that's approved with the mines department. So we think that 6 to 9 months, and we should have approvals from the mines department perspective, we should have government approvals to build a plant.
So thank you, Pascal. I think very happy to see you, and thank you for your presentation. And we all look forward to seeing the more resources updates and more updates regarding like all these prospects and projects. And also looking forward to see Matsa turns into a mid-tier gold producer. I will make a closing to the audience, then we complete here.